Julian Callow with us now from Europe with Barclays Capital. Julian, the news flow here is remarkable. In Europe, is the news flow mostly about coming up to these economic finance minister meetings? What is the catalyst for this latest bout of European news?
Okay, well, as you're saying, we really are in the realm of politics here. What is going on is that you have the IMF mission, the European mission in Athens at the moment. What is going to be found is that the government is having great difficulty in adhering to the programme, and in particular that original programme back from May of last year was envisaging that next year Greece would be able to obtain some financing, around 25 billion euros from the financial markets. That, of course, doesn't look at all likely given the situation that it's in with the budget deficit overshooting. So that really, I think, is one very important factor here on the European side. Meanwhile, business confidence is generally holding up. Though we are starting to see, I think, a few indications of some softness starting to come through, such as the German new orders data that came out recently.
Julian, this is critical. Bring up Euro Swiss here, folks. The market's really on a move. The Dow down 154, Brent's off 3%, and Euro Swissy leading away a 0.5% move in Euro Swissy 126.093. Julian Callow, is this tension about solvency, or is it tension about economic slowdown?
It's going to be the two. Of course, the two are very much linked. I mean, ultimately, governments can only repay their debt if they grow, and that's a big part of the problem that you've got in Greece, and a lot of the concern that people have towards Portugal and to Ireland. Can these economies really grow and therefore service the very large debts that they've accumulated? And it's a big issue for Portugal and for Greece. But behind that, of course, the system is being underwritten fundamentally, let's face it, just by Germany here. Okay, France is there, Italy is there, the Netherlands is there, as well Spain is there. But really, it all hinges on Germany, and the German economy on Friday is set to produce some very strong GDP numbers. We think up 1.2%, which is not annualized. Around a 5% annualized growth rate from Germany. That'll be the Q1 number, we think. But that is probably the peak in German growth. The stronger euro, some of the geopolitical uncertainties that we're getting, even to some degree the very modest degree of tightening that started to come through in market expectations, is all meaning that the environment going further forward is becoming less positive for the euro area. And it's a big question mark, really, whether there is enough stimulus in place to make it sustainable.
I wanted to focus on Europe, folks, by focusing abroad. Here's a chart that I stumbled upon today, waiting for renminbi to appreciate. This is the trade-weighted Singapore dollar, Julian, and it's just a steady ascent from 2004, the trade-weighted Singapore dollar. I mean, there's a lot of moving parts going on here. Is it a question of some of Europe and the United States being left behind by Singapore in an ascendant Europe?
Well, I think what this shows us is just the dispersion of growth, however you cut it. Certainly if you cut it from a European perspective, you find Northern Europe, Germany, the Netherlands, Sweden, Switzerland, Denmark doing very well. You find Southern Europe, Italy, Spain, Portugal, Greece doing poorly, particularly in the case of Greece. But then you have these big differences between the advanced economies and the more emerging economies, or differences between Europe and Asia. I think what it goes to show is that we need to have certain parameters to analyse growth prospects. And in the case of Asia, even including China, the government sector has low levels of debt. Often the private sector debt levels are not a problem, given the extent of momentum in the economies. And this will ultimately be reflected in real exchange rates. What's happening, though, in Europe is the currencies can't change within the Eurozone. So you are seeing the resolution, if you like, in a market sense of the differential growth rates being expressed in different ways, such as in the relative performance of the DAX index.
Well, let's leave it there. Julian Callow, thank you so much with Barclays Capital. Too short a visit today.